Welcome Forexians. In this video, we're going over how to do top-down analysis of the EURUSD. So this video is specifically tailored to the Euro-US dollar. However, many concepts that we're going over in this video can be applied to any Forex pair. My name is Dylan. I have been trading for over a decade and I have thousands of profitable students from around the world. Be sure to watch until the end of this video, as I have a special method of analysis that no one else talks about, and I will be revealing it at the end of the video. I promise, if you backtest the methods I am teaching, you will start to make money. Warning. If this is your first time listening to our education, our videos, get ready to realize that everything you have been taught about the markets is a lie. The trend is not your friend. Support and resistance is nothing more than a tool used to manipulate you. At the end of the video, comment below the video something new you learned or how we have helped you see the market differently. And I will be picking 3 lucky traders to get access to our signature trade course completely for free. All right, let's get started. So obviously we're on the Euro-US dollar. What I'm going to do right now, and what I like to do first, is I like to go on a higher time frame. We'll start with the daily time frame. And we're going to just find the overall trend. So we're going to look at the Euro-US dollar and mark it up before this move happened here. So right here we have pretty obvious uptrend, and what I like to do is I like to place one trend line and I will just copy and paste it. So as this is for the Euro-US dollar, what we're going to be doing is we're going to be analyzing different indexes, and this is what we're going to be going into later into the video. Now that we see the very steep uptrend on the daily time frame, what I'm going to do is I'm going to go into the 1 hour time frame. What I'm going to do here is I'm going to also place some trend lines where I see trends, very obvious trends in the market on the Euro-US dollar. So here I can see a trend. If I just copy and paste this trend line, we can see very obvious trend here, and then it came to a high. So we're going to mark out this high as well with a triangle. We're just going to drag it across here. So we could mark this as the high. And then what I'm going to do as well is I'm going to mark up another trend that I see here. And I'm just going to copy and paste. Like I said, that's what I like to do. I like to keep my lines very parallel. So as we can see, we have some trends within trends, but this is mostly just an uptrending market. We can see they're somewhat respecting this trend line. On a lower time frame, it converts into a downtrend, but then as soon as it gets to this bottom trend line, it moves back up and keeps going with that overall macro trend, the macro trend that we see on the daily time frame. Now, if we zoom out a little bit, we can see we can get a bigger picture, a better picture of the entire trend, the trends within trends, and maybe we can even take our trend line, put it here as well, so we have a good idea just of the trends within trends and whatnot. So if we zoom in, we can see that as soon as price gets back to this high and actually breaks past this high, if we were to have a resistance here, As soon as price breaks past this resistance, it reverses off of it and then comes back, breaks past, just barely breaks past the resistance, reverses off of it, and once again breaks past that resistance and reverses off of it. So what I like to do is I like to move down the chain. We started with the daily time frame, then we moved down to the 1 hour time frame. Then we can go to the 15-minute time frame. And as you guys can see, I have something on my chart that allows me to see the days of the week. Now what I'm going to do is I'm just going to go to settings, and somewhere in here under events we have session breaks. I personally do not use indicators. All I use is price action and market structure. However, this is, if you were to call this an indicator, I would say this is my favorite indicator, even though I really don't use indicators. This is the only thing that I use, session breaks and these days of the week markers. So this allows me to see each and every day. Why is this important? This is important so that you can see where one day begins and where the next day ends. Also, you can see the highs and the lows of each and every day. Now, a lot of times when we're trading a reversal, which is my personal favorite setup to trade, a reversal in the trend, when we trade reversal, 9 times out of 10, the market will make a move off of a high or a low and then make its reversal. So in this case, we can see this previous high that we have highlighted here in red was penetrated multiple times, and this trend line, or this resistance was also penetrated. However, so that would be a previous high. Now, if we look at this high, which would be the high of Friday, as marked out here, this high was penetrated the next week at the beginning of the week, Monday. We see price shot up to this high, penetrated this high, got retail traders, got the masses to believe that this was a breakout continuation trade, and then what happened? They completely reversed against the masses. So this gives us a little better understanding of what's going on in the market. Now, like I said, this is a top-down analysis. So what I'm going to do is I'm not only going to look at the euro US dollar. We're looking, this video is specifically for the euro US dollar, but to understand, and this is key, okay, this is key, this is the sauce right here. When you understand the euro US dollar, you have to understand the euro and the dollar, not just this specific pair. So that seems pretty obvious, but nobody teaches to go into the euro index and separately go into the dollar index and analyze both of them and then compare them with the euro US dollar pair. So that's going to be the secret sauce of this video. That's why this top-down analysis is dedicated solely for the euro US dollar. Everybody else makes videos on how to do top-down analysis, and they do them very generically. They say, well, you go into the weekly, then the daily, then the 4-hour, and whatnot, and move down the time frames. I do something similar. However, mine is more in depth. I don't follow the masses. I don't use the same strategy as the masses. I do not follow the trend like many people do. On contrary, I am always going against the trend when I see the trend is extremely obvious. So here we can place trend lines, and it's very obvious that this is a uptrend. And then if you zoom out, this is very obvious that this is an uptrend. However, this wasn't like that a few days ago or a week and a half ago. A week and a half ago, we only had this much structure to work with. So you can't really see that there's a high, a low, a higher low, a higher high, a higher low. When that happens, when those, over time, when this happens, the market becomes very predictable, very easy to predict. Okay, I'm just going to place my trend lines here, and then I'm going to buy off of this support level. That's what the masses are waiting for, and that's why everybody gets screwed over day in and day out, week in and week out, because they become so predictable because their strategy is extremely predictable. So, moving back to the top-down analysis, and we're going to get into the different indexes, how to analyze just the Euro index and just the US dollar index as well. Now, we have a good idea of what's happening as far as the trend on the different time frames. We see this large macro trend, and then we have the high, and then we have a smaller micro trend within that macro trend. And if we zoom in, we have this week and this previous week were working off of the high of this. I would say that was the high of the previous month right here. So notice how they spent an entire month. This was the last day of the month in August. And then September, they started right here. So August, September, they were working off of the high of the previous month right here. And then once again, they worked, or they were basically in consolidation or in a downtrend and then in uptrend inside of this overall macro uptrend for about 30 days, for a month in total. So we can see they came back to the high, which is not only the high of the month, but the high of the previous month as well. See, this is why I say it's so important to understand the highs and the lows, because this is where the liquidity is going to be. This is where traders are going to be placing their stop losses, their entries, their stop orders, whether it's a buy stop, sell stop, or whatever. In this case, it would be buy stops trying to catch the breakout and the continuation of the uptrend, which did not happen. The only thing that happened was they broke out of that resistance and trapped a lot of traders at these highs before reversing. Where are these traders going to have their stop losses? They're going to have their stop losses right under this trend line. You can see the price came, when price reversed, it came right to that trend line very fast. Now, we're going to start doing our top-down analysis. But first, we had to get into the Euro-US dollar and look at the Euro-US dollar and kind of figure out how it's trending, where it's going, if it's an obvious trend, and what the masses are thinking. So, now what we want to do is we want to go into the Euro index. Actually, what we're going to do, we're going to start with the dollar index, just because whatever the dollar does, the euro is going to do the exact opposite, because the Euro-US dollar is on the other side of the Euro-US. The US dollar is on the other side of the Euro-US dollar pair. So we have a very obvious downtrend on the 1 hour time frame. And what we're going to do, what I'm actually going to do is I'm going to start just like we did on the Euro-US dollar pair. I'm going to start with a look at the daily. So on the daily, we have a very obvious downtrend, and this downtrend lasted, about over 100 days. So from when we started to right around here, right before we ended this downtrend and it shifted, it was a little over 100 days. Now, this downtrend, if we were to take away this and we were to just see right here like this, we can't tell it's a downtrend yet. We can kind of guess and we can put the trend lines, but we don't really know for sure that it's a downtrend. Now, on the other hand, over time, that downtrend is going to start to get very obvious. Now, that's when the red flags start going off as per my strategy, okay? Meanwhile, the masses start to place their trend lines and they're like, oh, this is easy. I see a trend. I just have to copy and paste my trend lines, do whatever, and then I'll just be selling right here, sell right here, sell right here, just because price is respecting this upper trend line, and it's most likely just going to create another lower low, and it's as if it was that easy to trade Forex, right? Everybody would be making money because they all say the same thing. Just follow the trend is your friend, and that's how you make money. In this case, in my strategy and my experience of over a decade of trading, that is far from the truth, okay? As soon as the trend becomes this obvious, you want to be looking at how you can go against the trend. And all of these confirmations, the highs and the lows, everything that I'm combining together is what will give you this top-down analysis of the euro-US dollar and how it could play out. Now, we know that whatever the dollar does, the euro is going to do the exact opposite. So, just like the euro-US dollar was in a downtrend for, an uptrend for a very long period of time, the dollar is in a downtrend for over 100 days. Now, if we were to zoom in, let's look at the 1 hour time frame. If we zoom in, we can see we'll plot our support and resistance levels, but we're not going to be using the support and resistance as the masses do, as a retail trader would normally do. What we do is we think, all right, everyone's going to be plotting their support level right here. What is the most likely scenario to happen if you were manipulating this market and you wanted to fake out the majority of traders? What are you going to do? Well, most likely you're going to break past that support level. And not only that, if you want to reverse the market against the trend, you want everybody to be going with the trend so that you can take everybody's money as the market manipulator. So what is he going to do? He's going to break past the support level and then reverse the market and hit the stop losses of the retail traders, of the masses that think, oh, I'm just going to trade the trend and it's going to be extremely easy to make money just by selling right here when it touches this trend line, right here when it touches the top trend line here, and all this time. Notice all the time they're giving sellers of this market, and the sellers are going to have their take profit levels down here. But notice that the market makes a low right around here, and it doesn't really go past this low. It just barely goes past this low right here for a split second, but the majority of retail traders of the masses are going to have their take profit levels down here, waiting for that next leg, that continuation of the downtrend. Meanwhile, where are they going to have their take profit levels? Their take profit levels are going to be right up here. So notice how this combines with our bias on the euro-US dollar. If we were to be generating a bias on the euro-US dollar, well, first of all, we saw the trend on the dollar, on the euro-US dollar. So we know that since it's a very obvious trend, it's most likely that they're going to move against the trend because it's becoming so obvious and so predictable that if they keep going, the masses are going to make money. And as everybody knows, the masses are always wrong. 98, 99% of the time, the masses are losing money in this market. And why is that? It's because they all use and regurgitate the same exact information over and over and over. They repeat it non-stop. The trend is your friend. Don't go against the trend. Just use indicators and support in your resistance and you'll be good. No. Here at Forexia, we do the exact opposite. We use price action, structure, and we do not use any indicators. So these red zones that I am marking out right here are going to be the stop loss levels of those traders that are selling here, 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 and they're placing their stop losses right above this upper trend line. So we know, just like we saw previously on the euro, we have an inverse mirror of basically the euro happening right in front of us. And we can see price immediately after inducing as many sellers as possible, they reverse against those sellers and hit their stop losses one by one by one. And this was an NFP event. And then something very curious about the euro, which makes me believe even more that the markets are completely manipulated, is that this FOMC rate cut event happened right here. That was the first breakout past this support level at 100.157. Now, notice that they also broke through a extremely psychological level on the dollar, which was the 100.00 price level right here. So they broke past this during a rate cut event, which was apparently going to be very bearish for the dollar. Now, if you take all of this in consideration, because now we're even going into a little bit of fundamental analysis, but I don't want to go deep into fundamental analysis. I don't want you to screw you guys up. I just want you to think, how is it that the masses are going to react to this fundamental event, and how is it being shaped? How is the perspective being shaped? Well, according to technical analysis, we're in a downtrend, and it would be pretty obvious that if the market was going to tank and it was going to continue its downtrend, that the masses thinking that it's going to be a bearish rate cut and it's going to be bearish for the dollar, if they think that, you have a perfect advantage over them because they're being herded like sheep into the slaughterhouse, right? We're engineering such a predictable event combined with the technical analysis that goes on the side right here, the obvious trend, the downtrend, and not only that, but we also have the right here, I like to call the signature trade, but we can, for this sake, we can call it the wedge pattern. And what happens with the wedge pattern is that normally traders just trade the breakout, right? You're taught just to trade this breakout with the trend. So that's another reason for retail traders to continue selling into this move. Not only that, but combine it with the rate cut, and you have a massive predictable event happening right here. So this gives us even more confirmation that the euro US dollar is most likely going to reverse if we believe that the dollar is also reversing. So if we see that all of this is setting up for a reversal on the dollar, but first of all, they're making everybody believe that it's going to continue the trend. However, we know that this is going to be most likely a fake out to get everybody to sell, and then they're going to reverse against the trend. Now, if you take all of this and you inverse it, you get exactly what's happening and what we saw on the euro US dollar. We saw the high. We saw them breaking past this high right around here. is the rate cut on the euro US dollar. Right here. And if we were to place a, let's say, a resistance right here, we can see price came to this spot, didn't break through it, then finally broke way past it, and then it became support, breaks through it again, and then comes to it just to touch it here, engineering a place for retail traders to place their support and resistance, right? And then, what do you know? Right here, use this news event to manipulate everyone into buying into the trend here on the euro US dollar. And then they continued that trend for over a week just to make you believe that it was going to continue the uptrend because the news of the rate cuts for the US dollar, the dollar index that we just saw here, was supposed to be bearish. So that would be bullish for the euro US dollar. Notice how I'm creating a bias based on not only the euro US dollar, but also the dollar index. And now we're going to move on to the euro index. We're going to do the exact same thing. We're going to look at the daily time frame just to see the overall trend. And this looks very similar to the euro US dollar. So we can see pretty obvious trend line here, pretty obvious uptrend. And then we have a high right around here. And notice how they just break past this high, getting everybody to buy in with the trend, and then they reverse the trend and hit the stop losses. If you're trading this as a buyer, where are your stop losses most likely going to be? They're going to be under the trend, but you're going to want to place them under a previous structure. So we're taught to place them under this previous structure low right here. And notice that one of the biggest candles was right into that zone. The purpose of this massive move here was to sharply hit as many stop losses of the trend traders as possible. This is why I don't trade the trend. This is why I don't trust the trend. This is why I look for, once I see an obvious trend, I will always look for the reversal of the trend because it is imminent that it is coming. They cannot keep a trend going for an extended period of time without giving the masses money because it becomes so predictable and easy to trade. And as everybody knows, me as someone that has spent 10 years of my life trading, I know it's not easy. But if you watch a YouTube video from anybody else, they'll tell you, oh, there's 3 key things: support and resistance, throw some indicators on, and never forget the trend is your friend. Never go against the trend. That's what everybody will tell you. I am the dude with the tinfoil hat on, the conspiracy theorist, saying, no, maybe you should look the other way. Maybe you should do the exact opposite, and maybe the trend really isn't your friend. Maybe it's pre-engineered. The entire thing is pre-designed to manipulate you, hit your stop loss, get you into a predictable system so we know exactly what you're going to do and how to take your money from you. That's the way that this market was designed. And that's what it's designed to do. All right, if we look at this, once again, we have this is kind of choppy. There's a lot of gaps in the euro index just because it turns on and off. It's not like most pairs or whatever, but we can see structure. We can see structure pretty well. And what I like to point out here is we have a pretty obvious wedge pattern. Not exactly too obvious, but you can see it if you look close enough. If you were to connect the dots here, you could make a nice little wedge pattern. And what is the predictable thing to do with this wedge pattern? Well, just follow the breakout. So how many confirmations do we have here that the euro is going to go up according to the retail or the masses? Well, we have an uptrend. That's number one. We have an uptrend. Number two is we have a high. We have this high right here. And we know that the characteristic of an uptrend is that the market makes a high, a low, and then makes a higher high, and then a higher low, and then a higher high and a higher low. That's the characteristic of an uptrend. So everybody that has these trading robots that claim to make millions of dollars and that they're programmed to detect these movements, detect trends, what are they looking for? They're all automatically looking for a new high, to buy into a new high. Or what about all the breakout traders? What are they looking for? The breakout trend traders. They're looking to go with the trend, and as soon as you see a high, just place your buy stop right above that high, right above the resistance, and catch the breakout. So all of these confirmations retail traders or the masses use, but they're actually being used against them. Okay? Their strategy is their biggest downfall. And this is it. You can see it in real time happening right here. So this is like I was saying, the wedge pattern. How are you told to trade the wedge pattern? You're told just to buy the breakout of the wedge. Just buy into the breakout. So we see the wedge breakout, price starts breaking out of this wedge, and another confirmation comes in, right? That would be considered another confirmation. So here we have multiple confirmations if we were the masses, a retail trader that just started trading or just uses what they're being taught on YouTube by all the generic people, the generic traders that really have no idea what they're talking about. This is what they're doing. They're taking all of these confirmations, combining them, and saying, oh, this is an A+ setup. They're buying in right here and placing their stop losses right under this previous trend line, this bottom trend line. And most likely a lot of stop losses under this structure low right here. So what does the market manipulator do? He makes all of these confirmations. He sets this up to make you believe, oh, we're just going to make money by following this strategy. That's so easy. All you have to do is plot some lines, follow the trend, catch the breakout of the wedge along with the breakout of this resistance up here, and we're just going to trade that along with the news event and all this. Oh, the dollar is so weak, so the euro is going to be super strong. Yeah, all of this is engineered. It's all controlled. It's all manipulated. And this is the best proof I can possibly give you, because as you can see, right when they tell you, right when they catch your order right up here, where you believe that where all the confirmations are combining, what happens right after? They completely dump the market. Complete dump. All right, let's go into the 1 hour time frame. Not sure if this is going to make much of a difference, but here you can see a little bit more of the wedge pattern that was playing out. And then we can see that breakout past the high, past this previous high, and this previous high was in August. And they did not even go close to this previous high in September. And then here, notice, actually, yeah, they did right around the end of September. So they spent almost an entire month kind of in consolidation here, creating this pattern here on the euro, making you believe that this was a bullish pendant pattern or a bullish wedge, rising wedge. They have so many silly names for this crap. And then what happens? Well, the obvious happens, but it's not so obvious for them. For them, they're just following their strategy that they found on YouTube that they think they're going to make money with. And there's millions and millions of traders around the world thinking the exact same thing. Oh, I'm just going to trade this bullish pendant pattern, wait for the breakout, follow the trend, catch the breakout, catch the higher high being made, place my stop loss right down here, and my take profit's going to be 100 pips above, 200 pips up here. And as you can see, what we know as the obvious happens. A complete reversal against the trend, and then this NFP event was used to smash through all of the stop losses of those traders. So notice how all of this combines, okay? Notice how we're just using all of these different combinations, different confirmations, different indexes to give us an actual top-down analysis of what is going to happen on the euro US dollar. So combining the dollar index with the euro index with the euro US dollar, and we get an extremely well-versed understanding of what is happening. Now, if we even look closer, let's go on to let's say the 15-minute time frame, we can see the different patterns that we previously spoke about, like the wedge pattern. We can see this forming on many different time frames. So here's a wedge pattern on the smaller time frame, on the 15-minute time frame. Very obvious wedge pattern, and it's breaking out to the upside past the high of the previous day, past the high of, not quite the high of the week, but past the high of the previous day, Friday, and this was the start of the week on Monday, Monday. Wedge pattern, just follow with the trend. How many traders were most likely trading Sunday? They marked everything up and they were like, oh, they've been waiting for this wedge pendant pattern, and whoa, they see this very strong breakout. This was all pre-engineered to get everybody to buy into this. Meanwhile, the rate cuts as well, a fundamental event where everybody thought the dollar was going to crash, dollar was going to get weak. Well, what do you know happened? The dollar got extremely strong, had one of the strongest weeks in the past 2 years. Now, if we were to zoom out once again, we can see another wedge pattern forming, breaking out to the high, getting retail traders to buy in, the masses to buy in. If we zoom out even more, I'm pretty sure we can see the same pendant that we saw on on the Euro index. Here it is. There it is, that breakout. And this was the FOMC event. Right? We have that big bullish pendant, whatever you want to call it, that rising wedge. And then the FOMC event, extremely bullish for the an extremely hard push to the highs, making everybody believe that the euro was going to continue this uptrend that it's been in for an extremely long time. And there it is. So as you guys can see, all of this fits together like puzzle pieces. It's like a big puzzle. It's like a game of chess. Everything aligns with itself. And when you can see these pieces for what they are, nothing but manipulation. This is nothing but manipulation. Everything is pre-engineered. There's a reason why rate cuts happened at this exact time. There's a reason why this bullish pendant happened right here, and right at the very point of this bullish pendant, it just so happened to align with the rate cut, and it just so happened to make everybody buy into it and make you believe that, oh, this trend is going to be followed. All you have to do is buy with the trend. The trend is not your friend, okay? If you take anything away from what I just showed you in this video, take that, okay? The trend is not your friend, you guys. All right, this was the top-down analysis of the Euro US dollar. The main focus was the different indexes and combining the indexes to get a better bias or a better outlook of what is happening on the Euro US dollar pair. So we had 3 different charts that we analyzed, and they all brought us to the same bias. They all gave us the same confirmations. We all saw similar manipulation throughout all 3 charts. And this is what nobody is teaching. Nobody is telling you that you have to look, or at least you don't have to, but at least it's better to look at, when you're trading the Euro US dollar, look at the Euro index. Look at the dollar index, because they're not the same as the Euro US dollar. Okay, we saw that the Euro index was similar, but it had different characteristics. The dollar index was similar, but it was obviously inverse, and it had different characteristics. The fundamental event, the rate cut for FOMC, played a very large role in what happened here with this move. This move was 250 plus pips on the Euro US dollar in 1 week. I personally caught this entire move with my students. If you'd like to become a student at Forexia, link is in the description. You guys can get our analysis. You guys can join our academy. This is what I personally teach. I do not like to teach any gibberish, any garbage that the masses are teaching or trying to perpetuate, like the trend is your friend, just follow the trend blindly, never go against the trend, right? These are all key words to get you brainwashed to believe in a system that is completely against you. The trend is not your friend. The trend is your worst enemy when it starts to become obvious, okay? And then before it's even obvious, you can't really even tell that it's a trend, and you're basically just guessing. It's guesswork. So once it becomes obvious, then you know what to do. You look at our videos, you find the confirmations, and you go against the retail bias, because they're not going to be right. they're wrong 90+% of the time. And we all know that. And why is it? It's because they all believe the same thing. They're herded like cattle into the slaughterhouse. The trend is nothing more than the slaughterhouse. Thank you guys for watching. Peace out.